Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, October 2nd, 2019. This will be an interesting video, or at least we have some pretty clear technical developments. What I like to refer to as unambiguous sell signals. So we have what I'm referring to there are those trend lines off the December 24th lows, where we had a couple little choppy candles kind of whip below them before. Yeah, I had to move the trend line a little bit to adapt, and then today we gapped down and really never looked back. A little bounce off the 200-day. I'll get to that on the intraday charts if you care about that kind of stuff. We'll certainly go over that, what transpired since last night and led up to this. But for you swing traders, investors, anything's possible. And what I throughout the day, I posted constant or continual updates on the site, and I'll start here and just make mention. So. We certainly have that breakdown and that sell signal there, and what we also have is so far a successful defense of the 200-day. Remember, this is a key moving average on most, not all, but most indexes. Certainly SPY, even more so QQQ, and a lot of tech-heavy stocks. That 200-day EMA is a big one. There's also I have a 200 simple moving average. It's tuned down in this chart. It comes in. You probably can't make it out. I don't like too many colors and lines here. The 200 simple moving average is right there, but I like the EMA. It's a little faster reacting since you're using an exponential moving average. It reacts to prices a little quicker. And the bottom line is, during an uptrend, I've covered this many times in the past on the weekly charts. It's the 40-week or 40-period EMA on the weekly chart, but it does a good job of defining the trends. Now, sometimes you get, as you can see here, a whole bunch of intraday. Well, we bounced off it a few times there, broke it a few times intraday, but always closed right back on it. Market participants, a lot of people use the 200-day, and so whether it works because everyone's looking at it, or there's some other mystical force, it doesn't matter because it is an important level. And so we hit it today, and for active traders, I posted in there, covering shorts going long for reversal, just a bounce trade off there, and I'll get to that again. It aligned with the intraday charts as well. I wouldn't purely do it based only on a tag there. In fact, we'll look at QQQ in a second, but right now, very simple. We have these wedge patterns here, the uptrend lines, which are now clearly and impulsively broken. No, like I said, not any ambiguous read on that. Way back into the August trading ranges, even below the midpoint of the range. I said that would be bearish, and I also said recently, once we entered the range, we would probably start, the selling would most likely begin to accelerate, and so far that's what's happened today. So market was quote unquote saved by the bell, but we're not at waterfall type sell-off mode yet. It was a pretty persistent down day earlier in the beginning of the day, and then a little lift towards the end once this 200 was kissed, and that's that. Let's look at QQQ. The Qs came a little shy of their 200-day exponential moving average, and again, that's usually helps define the bigger trends. Here you overshot it briefly, after the breakdown here, but we were well above the breakdown there. It started to accelerate hard before we hit it. Had a lot of momentum coming in, overshot it, and then finally gave it up. There was a lot of volatility back here, so you traded through it a few times, but as I highlighted in the past, each time we only came up about a day or two and then boom, right down back through it. Here was a little momentum fueled overshoot, so it's not a be-all end-all, but it is a level. Again, it produced a couple reactions off there, followed by a rally, and we reversed just a little shy of it there, you can see. But as I always say, I prefer to trade the Qs, a little more bang for your buck on whether you're long or short if you get the call right versus SPY. However, I will always watch both, and in this case, if the first of the two to hit, that's where the sellers may step in. So again, they stepped in on SPY when that level was hit today. QQQ has a little more downside. I think we get there, and I'll watch where we go from here. Like I said, until these levels go, they're important levels. It's still anybody's game. We had these sell signals, but they're not all in sell signals. Why? Because lots of reasons, but number one, we're still above those 200 days on this daily time frame, and then you go to the weekly time frame, and that's all that matters here is how we close the week. So let's just talk about that for a second. So we had a clear and impulsive breakdown. Here's our weekly candle right now we're working on. This is the trend line I'm highlighting or focused on right now, the one off the December 24th lows, or in this case, that candlestick of the week of December 24th, whenever that ended, the 26th or so. And let's tighten it up like this. So you have, basically a close on it last week, a clear breakdown today, but today's only Wednesday. There's 2 more trading days left in the week, so the bulls do have the possibility to pull this back up and close it on or above that trend line. So like I said, it's not a all-in short nail in the coffin thing yet. If and when this 40-week, which again the 40-week exponential moving average is the same as a 200-day moving average, if that goes with the conviction, that should open the door to not only more downside, but probably some waterfall type selling. And of course you want to see it go on the SPY as well. There's a SPY right there at the 40-week moving average there. And again, you can just see, when your market's trending up, it is support, 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 support. Once it's broken, as it was here, that's bearish, and then you go down. A couple overshoots, but again, these are weekly candles, close back way above it on the second one there. And we've been flirting with it recently, and we're flirting with it again today. So still anybody's game. Let's see how the week ends. But with the breakdowns in price, above the trend lines, and especially considering the divergences and everything else that's been building for a long time, I think good chance those levels will go soon. That wasn't all that broke down today. We had, of course, the tech sector, XLK. It's one I said I wanted to see go when tech breaks a market break. Tech broke the trend line. Both those, even the benefit of the doubt, that yellow BOD trend line, clear candle, clear close down below. So that's an impulsive solid breakdown. Still has its 200-day coming in below, and that's 75 level. So there's some work to be done. But again, it's this chart that tells me whether we kick back up now. Still can't rule out, if the indexes hold their 200s, still can't rule out a pop to new highs. Lower we get, the higher that makes it. If and as we move lower from here this week and into next week, it decreases the chances that this will prove to be a whipsaw signal, and it'll increase the chance that we open the door to more selling. So that's it. I can't take too much more of that, but I wanted to make clear that at this point, my focus now turns largely to the daily and even weekly charts. And although I haven't kept my eye off those, and I continue to touch on those, at this point, the 60-minute charts kind of take a back seat to what's going on in the daily time frame, because that opens the door to potential swing short trades that can last weeks, even months, versus these, the 60-minute charts here. In fact, let's talk on the 60-minute charts. Okay, so if you recall, yesterday we had closed just ever so slightly down within the top of the trading range on SPY, a little below the 294 level, and pretty much right at the top of the trading range on ES. Those were the last charts updated in last night's video, and I mentioned going home long on that, favoring to bounce because we had some divergence and all that. Well, later that night in the trading room, I posted this was, let's see, these charts. I think it's about 10:30 p.m. Yeah, about 10:30 p.m. my time, Eastern time, right here, 10:19. Changed my tune on that. We had potentially these bearish pennant continuation patterns. Beautiful. I mean, these are straight out of a textbook. Bearish pennants. They're like bear flag patterns, except instead of a flag with both trend lines up, you have a pennant formation, which you had here. And bearish pennants, just like a bear flag pattern, they're continuation patterns, meaning A, they come after an impulsive leg down, followed by a period of consolidation, typically on lower volume, then followed by with a sell signal to come, which it did come, and that kind of triggered, that set the wheels in motion for what happened today. Sell signal coming to breakdown. Then what you do is you take the flagpole, or that impulsive move down to the measure to the bottom of the flag, add it to the top, the highest point of the flag before the breakdown, and that gives you your measured target, which, as you can see, was below this chart. And that was NQ, and we had them on ES as well. Just beautiful, clean, bearish pennant continuation patterns, and they most certainly did play out, and then some, actually. In fact, the levels that we could have and should have bounced, we had a minor support here about 76.10. Markets had an opportunity to bounce and didn't. So here's what happened. These are those same patterns right here. That's the pennant right here, and this is NQ, by the way. There's your impulsive move down. It broke down here. And then here you flag. That's a bear flag when you have that. And then you bear flagged and had another drop. And in fact, it's kind of looking a little bear flaggish again. And I'll get to some intraday analysis if you want. I'm looking for a little thrust down in the after hours session today to undercut the lows. But so that's that. And that took us way down there. And let's look at ES. Let's see what it did to ES. Remember last night, as I said, when I did the closing market wrap video, we closed right on the bottom of the support zone, or support zone that defined the top of the August trading range. That's right here, these two lines. Here's your August trading range in this box here, and then we broke out, and so that's where the markets were. We had bullish divergence in place, everything. There was a potential for the markets to bounce. But what happened is we started forming those flags there, as I highlighted last night, and you can see they played out to the downside. And so what they did is two things. By this little, quote-unquote little, 60-minute pennant formation triggering, it took us back down well within the August trading ranges, and I said that would be a bearish technical event, and I said if and when it happens, what you would see is not just lollygagging around, you'd see impulsive selling. We had an opportunity to bounce when NQ hit support, didn't do it, and we flagged there and we went down. So there it is. I mean, that's basically what happened today. We broke down and the market is now back, and we actually look where we closed. It's interesting. Remember how I talk about these midpoints of a price channel or a trading range. In this case, I'm excluding this. This was an overshoot, a lot of momentum going down after prices stabilize on that initial correction into the August lows. This is where we formed really a bottom of that August trading range and the top there, so I boxed it in. And I said you can usually put a midpoint in these ranges, and I did here, and that's at 28.93-ish, 94-ish level. And you usually trade either once you're in there, you bounce around. The midpoint becomes the ceiling or resistance, and the bottom of the range becomes support. And once you break above, it's impulsive. We had an impulsive break, you run to the top of the channel. Little whipsaw here, but then we broke above again, impulsive move right to the top of the channel. Broke the bottom of the midpoint, went right down to the bottom of the channel. You get the picture. So you can boom, boom, boom. It's like ping pong. Trade off these levels. Bottom line is it's a significant technical level, and we overshot it today. Bounced right up on that rally today, which again was foreshadowed or predicted when we hit. Two things happened at the same exact moment. We hit, as I showed you earlier on the SPY daily chart, and we hit that, and then here it is. I think this is the right chart. Yeah, there it is. So at pretty much the exact point at which SPY hit that 200-day exponential moving average, it also hit the uptrend line off the lows on the August trading range. Remember, we overshot it there, but this is how SPY looks. This is an uptrend line I've had on my 60-minute chart for a while now, and that was hit today, and so therefore you can see, had a little bounce scenario, bounce off that level, for a little trade. And again, that's where you get very oversold near term. We're not at the point where where panic selling or anything. It was sort of an orderly sell-off, so there was a little tradable bounce. And again, so really what we're looking at, we need to impulsively take out this trend line. I think it'll happen. This is the uptrend line here. Let's get to it now. That was earlier today, taking it at 1:00 p.m. And let's look at the SPY 60-minute chart now and see what needs to happen. So there it is. There's that bounce right up to that 282.22. That's that line I had it at. It was a little tuned down there, dimmed down a little bit. And so tomorrow I'll be looking for a break of this level and today's lows. If so, especially if it's impulsive and we close well below it, remember that's the 200-day moving average on the daily. You don't see it here because we're on a 60-minute chart. So we need to take that out. We're not far off the bottom of the trading ranges. I already said it before it happened. I said once we enter those ranges, especially undercut that midpoint, we're probably going to take them out. So to me, it's just a matter of, is there any more upside? And again, I don't try to get cute. I'll game little bounces here, and as I mentioned, I reversed and went home short now after gaming that bounce. So let's look at QQQ, see if there's anything there to point out on the 60. There's potential RSI divergence right there, but here's the thing: we've been burning through divergences, and I spoke to that recently. That I said, look, normally 60-minute divergences, that's my cue to go long on swing trade, cover short, swing shorts, and go long for a multi-week to multi-month bounce. That's typical bull market. When you get these 60-minute divergences, that's where I like to reverse. And, whether they're negative divergences, reverse long to short, or bullish divergences, short to long. But what I said is, if we're at where I think we are in the stage in the market, those daily charts start to break down. They're going to override these bullish setups, and that's what's happened. So started with yesterday. Remember, we had that failed breakout. Here's the downtrend line right here on the 60-minute divergent low. Bullish divergence there. Breakout, which was then shot down. That's a bear trap. I'm sorry, a bull trap. Failed breakout, and you can see how impulsive it came down. And just like I said, a series of flags. So one thing you might want to watch if you're trading futures right now or overnight, here's a potential price channel in NQ. It's pretty steep. You got to be careful. The steeper a price channel is, more likely are to get some whipsaw signals in and out of it. But right now, like I said, there's not a lot I see in these 60-minute charts that scare me out of my short positions. The only thing that gives me a little pause right now is the fact, the buyers could still defend those 200-day moving averages. They, SPY defended it today, and QQQ has yet to even hit it, even though it was a little shy there. There's a little bit of support around here where we landed, but that's it. And again, swing positions, guys. I'm talking a lot of active trading stuff. I have, an active trader. I wear two hats. I've been in and out of NQ. 4 or 5 times, long and short, since yesterday's video. That's how I trade actively. But then swing shorts, nothing's changed for the last couple months since we broke down here. Really, that was a sell signal. I waited. We added the official shorts here, and right around here, and we're that's the last time. Today we added some more short exposure, but. And we're below that now. It's just you have to let the market come to you. You have to sometimes be patient. And right now, I had this question. I'm going to answer it again. A member asked, should I cover shorts at the lows today? And look, that's not a straightforward question. It's answered differently by whoever asks it. Whether if you are short, or we're short coming in today, or added shorts, whether you cover it or not at the lows, number one is a bounce there. There's always going to be these counter trend bounces, but you have to define your time frame, your targets. I have price targets on QQQ for members, downside targets. I'm not going to share those here. This is a public video, but if your target is shallow, and you hit the 200-day and you're trying to only target a couple percentage points, sure, you take profits at the 200-day, maybe wait for it to go and you can jump back in. But otherwise, if you're looking, I see as much as 30% downside in this market over the next several months, potentially, and maybe over the next year. And so if you share that mindset, you have a good entry right now. We just broke down. If anything, I think you should be thinking about adding to short positions. Like I said, wait for this to go. Let's see if the week closes. We get these solid weekly closes below the 40-week EMA, below these trend lines, all the better. There's your additional check marks. That's how I look at this. There's a bunch of boxes. Several of those boxes have been checked. One big box was checked today. If we close the week well below where we today's lows, another big box is going to be checked, and I'm talking a box for swing traders. No more of this in and out 5-minute, 1-minute active trading stuff. That I'll always be doing that, whether we're in a trend. I'll game the little micro trends within a larger trend, but this is where a lot of people that are not active traders work a full or part-time job. This is where they might want to start taking note of what happens over the next few weeks here. The primary longest term trend indicators are still fine. They're still intact, still a bull market. But like I said, the technical posture, the weekly and even the monthly charts is indicating a major drop in this market, whether it's already started, whether it actually started back here with QQQ, or whether there's another leg up, because any kickback rally this week, any stick save back above these trend lines, although that would be near-term bullish, it's not going to change the technical posture that I'm looking at here anytime soon, at least not over the next week or so. And then finally, we'll just wrap it up here with short-term active trading stuff for those of you interested. Here's, a couple charts. You're early in the day, when I mentioned, reversing because of SPY hitting the 200-day and hitting that trend line support on the on the 60-minute charts. I mentioned these. This would be my bounce target. It was earlier in NQ, and I wrote it up to there, reversed, and reverse short, but then decided to reverse back long again, looking because you could see this bottoming pattern intraday turned out pretty clear. Markets that stabilized and were holding above the 200-day, and we had this almost inverse head and shoulders pattern right there with that neckline at that target, and it was ready to go, primed, ready to break. And right after I posted it did break out, so that triggered a long entry, and that was on the intraday charts here. I can show you those charts here in a second. Here we go. And at that time I said, look, I couldn't find or identify a hard target, so I just said I'll trail up stops, and then I did come out and find a target. So this is that same level. So you can see, again, this is just active trading, day trading stuff. We broke out of that 75.62 resistance right there, came in, make it almost perfect back test, rallied up, so what I did is identified these downtrend lines, particularly the one in NQ, because that's what I was trading. And as I said here, I could have held out for a full test of that trend line, but I reversed just shy of it, around that 75, 85-ish somewhere level, and then also showed you the same thing on QQQ. Here, let me find it here. I'm gonna just pull the QQQ chart, and I posted in there. I have these charts buried in the trading room. This is QQQ, and I posted this one on a 2-minute chart. So this is a comparable downtrend line, although NQ reversed just shy of that trend line. QQQ hit it. So this was this is a level to watch. Now this chart here does not reflect after-hour trades, but this is what we were watching today, and so that was a good area to take profits on any bounce off the lows today. And then it set up this little minor downtrend line here, which was broken. And as I can't find, I had a chart out there saying this is my preferred scenario, to see that trend line break, and we'll go on to undercut those lows, whether it happens today or in the after-hour markets, or coming up soon here in the after-hour session. So that's what I'm favoring. And again, this screenshot was, this is live through the close. So we never did get above that trend line, and we'll watch. You have a comparable trend line, like I said, in NQ, a little bit above there. If they happen to pop it, there's a little bit of resistance. So these are levels you can watch tomorrow. In fact, you want to watch probably a big level would of course be yesterday's close. That's right here, that yellow dotted line, and that would be a backfill of the gap. But other than that, QQQ has its work cut out for it. Plenty of resistance. There's the bottom of the gap there, about 186, bottom of today's gap, and then the top of today's gap up there, about 187.25. So, and again, based on what happened on the daily chart now, those are some pretty solid breakdowns. I'd feel much better if the 200 days were behind us, those 200 EMAs, but have to take it on face value for what it is. And so right now that puts the market in, on a sell signal. And keep it very simple. That means if you're not a very active trader, you just do what you do in a bull market in reverse. In a bull market, you buy the dips and sell the rips, or just keep buying pullbacks, buying the dips if you aren't actively trading. And now we are in a short the rips and cover the dips if you're active trader, and if not, just short the rips. So if you want to get short, these are levels to look for tomorrow on QQQ, about 185.25, 186, the gap, and then of course the maybe a full backfill of today's gap, and of course you still have the trend lines. I mean, there's a lot of overhead resistance now. Anything much more than that, we'll just have to play it by ear. Let me go ahead and wrap it up here, and we'll have to pick it up. Like I said, the next 2 days will be telling. Do we bounce off these 200 days as we have in the past? That's certainly possible, but the difference back here versus right now is, back here it was just a correction off this minor trend line break, and that brought us to the 200-day. This time around we just broke some pretty important trend lines, and we also fell back within the August trading ranges. As such, That's why I favor this time around being different. That's why I'm not buying for covering my shorts in my swing account and going long. That's why I'm going to hold out, ride out any bounces for at least near term, and then look to add to short positions, core short holdings, if and when those levels break. Minor downtrend line there as well. Okay, guys, we'll wrap it up here and pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.